in real estate, what's changed over the last, I guess, couple of years is that with interest rates and prices, is that we're seeing on the streets now like way more options for investors that are like cash flow positive options.
Yeah, the real investors are showing up again.
Yeah, but that's what I think real estate investing got so associated with condos
and get rich
almost
quick.
Toronto condos.
And get rich
speculation
quick.
For sure. Yeah, I'm not even including that, but specifically like one segment of the market that all these other segments of the market are almost forgotten about, and they're not kind of spoken about widely. People just look at like the condo numbers and be like, well, the condos, investors aren't investing in real estate because these numbers don't make sense. And we can tell you, we know a number of people. We've had some people on the show, but like specifically even in Toronto, we know that there's been a growing number of people investors going back into Toronto because the numbers make sense again because of the bylaw changes and some of the things they can do with the properties they own. So they're back.
And even in areas like Hamilton where people were going wider outside of Ontario, they're back into Hamilton because you can buy a 3-bedroom house again on the Hamilton Mountain for like $639,000 that you can straight rent and break even. Remember, we were shocked. We're like straight rent's breaking even again, which we haven't seen that in like over a decade?
Yeah.
Straight rent, or you can do a rent to own on it, or you can do it as a student rental, or you can duplex it. You can legally duplex it, like a legal second suite. So now, if you legally duplex this thing's going to cash flow like $1,000 or more. And these numbers we really haven't been able to talk about for a little while. And now they're back. And that's where the sophisticated investors are starting to come out of the woodwork. It's not.
So what's the argument from them is in an environment where the prices are likely going to be flat, right? In that asset class, condos maybe not. Maybe there's more pressure downside. I mean, look, they can go up, down, sideways, whatever. But there's not too much. It doesn't look like in the near term there's this upside. The investors are coming and they're buying these assets, and like some people are going to look at them and like, why are you bothering?
Well, I mean, over the long term, they go up, like we just said, over longer periods of time. Unless you're buying it for 2 years, if you're holding it a long-term rental for 10, 15, 20 years, the history is telling you it's going to go up 6 to 7%, not because the real estate changes, but because the money debases. Yeah. So these properties go up 6 to 7%. Now on leverage, if you put 20% down, right, and it goes up, let me take the high end here, 7%, that's a 35% return on your investment. In that year one, I know as the debt gets paid off and the numbers start to change, but that's the argument. And then you're getting income. So if you can find a property that cash flows, you duplexed it, it goes up, you're holding it for 20 years, the return, because you're only putting 20% down. Like the only thing that's good about real estate, let's face it, is that the banks use it as such pristine collateral still that they lend on it. So it's the actual fact that you can put 20% down and get financing for 80% that gives you like the real leverage. And then if you can offset the risk of the leverage by having a tenant carrying your carrying costs, rents don't seem to fluctuate nearly as much as prices do, right? Some rents, I guess when the condos were really hitting high, they've come down. But in general, our single family home rents, they're pretty steady. Student rental rents have like stayed pretty strong. They've come down from they've barely come down. Actually, they barely come down. Yeah, I don't even think they've come down.
I mean, maybe there were some, not ours, but maybe there was some.
Maybe $1,200 a room went to $1,100.
Yeah, maybe somewhere like if there were, but even I was going to say even higher than that because some are renting for that. But yeah, at the very top end of the market.
Well, at Western, when Aiden started, it was $650. When he left, that same room rented for $950. Yeah, right, and it's still $950. But I think the argument is that if you hold these things for a longer period of time and you get the leverage, if your costs are covered because rents don't fluctuate as much as the price of the house, you hold it, you pay things off, you get the leverage, your money's working, you're outpacing the debasement of 8.12% now. You're getting some cash flow. Yeah, in exchange, you have to deal with the tenants, you have to deal with the landlord-tenant board. There's a trade-off. But I think
it's something that isn't taken into account a lot is that the real estate really, there are times when it overperforms and underperforms, but if you compare it to the growth in the money supply, really it lines up pretty well. So the actual real estate really hasn't gone up in value very much. If you go back all the way to when we look at the numbers, I think it's 69, but say go back to 1970, so what's that last 50, 55 years. And it's kind of really just kind of held up that way. So prices haven't gone up. It's just the value of the dollar has really gone down.
It's so hard. It's such a hard concept to explain, though. Like it's so hard for, I think, the general population.
But how is it hard to explain or for people to understand? Because if you just explain it in a way that, look, if you had $100,000 in your bank account in 1970, how much house did that buy you? And if you have that same $100,000 in your bank account today, how much house does that buy you? Doesn't that make it pretty clear?
Yeah. Just most people will associate that with the house is gone up. They don't think the dollars in value have gone down. but the purchasing power of those dollars is going down. The bricks and the roof and the wood is like exactly the same, actually probably deteriorated a little bit over the 50 years, but it's the same. But nothing's changed with the house, to your point. It's the value of the dollars that have been decimated, but nobody thinks from that frame of reference. It's so difficult. I know, because talking to people, you're like, it's just so difficult. They don't get it. And we're all working for dollars that somebody else at the government level can print out of thin air.